Central banks are stealing your money and funneling it to the financial industry. Reuters reports that the European Central Bank lost a record 7.94 billion euros in 2024. This is because the ECB pays interest to the banks for the money that it itself printed. Nor is this limited to the euro system. The Federal Reserve reported losses of $201 billion in 2024. The loss is much greater in the American case because the way that the euro system is structured means some of the losses borne by national institutions rather than EU ones. In the United Kingdom, the losses of the Bank of England are absorbed directly by the Treasury. The present budgetary woes of the British are due to the £40 billion paid annually by the BOE to the financial industry. Up to a third of the British budget deficit in 2024 was due to the invisible subsidy to the financial institutions. How did we get here? The short and somewhat simplified answer is that the Western central banks printed a lot of money in 2008. A lot. Trillions, in fact. And those trillions broke the mechanisms they had for controlling interest rates. In the new era, central banks decided to control interest rates by paying interest to the commercial banks. The way that interest rates are controlled by the central banks is by setting a minimum rate of profit for the big commercial banks, so that they don't charge interest below this rate. Because why would you charge an interest rate below what you can charge to the central bank if the central bank is guaranteed to pay and the poor losers out on the street might go bankrupt? Central bankers defend this as normal operating procedure, but it fuels massive budget deficits across the whole developed world. Normally, central banks turn a profit and transfer their profits to the Treasury. When the money is siphoned by the banks, not only does the Treasury not receive the money it can spend on crucial services like healthcare and education, but also the budget deficit grows, as is the case in the United Kingdom. Even if the losses aren't reflected in the budget immediately, the central banks have to earmark their future profits, meaning they'll transfer less money to the Treasury in the future, or print money to cover their losses.